Welcome to Space Terminal, the show where we sit down with founders defining the next century of space infrastructure. Today, I'm joined by Yuk Chi Chan, founder of Charter Space, an insurance and logistics management platform built with engineers from NASA, Rocket Lab, and the military. So Yuk Chi, you're unusually comfortable in industries most find intimidating. You trained in the military, studied law, worked in space, and are building an insurance. How did you get so comfortable in the uncomfortable?
I think of most of the world in a systems level sort of framework, right? Systems level thinking, I think, is a mindset that proliferates in the space industry. Systems engineering as a discipline was pioneered by NASA specifically to account for the complexities of spacecraft, right? And so that's sort of proliferated out now into other fields. I think going along that same vein of looking at everything as a system, it helps you feel a lot more comfortable because you realize that all these fields, while seemingly on the surface are disparate, they all tie into each other, right? The regulatory environment informs the capital environment, which then informs what is possible from an engineering perspective, which then ties into downstream markets like consumer and military applications. Everything's linked through to each other, and so if you think about it as one giant system, and every constituent element of it as being dependent on another element to one degree or another, everything starts to make a lot more sense.
Imagine you step back to your alma mater, you're invited back to rewrite one chapter for the next generation. What doctrine are you emphasizing and what is officially outdated?
It's not good enough to just be an expert at just one thing and to bury your head in the sand. That's ultimately why I left legal practice. It's because I was doing government advisory work. That's what space law primarily is concerned in and around, right? It's the only people that really care about space law proper are governments and folks working in governments because it's primarily international law. And so it only really concerns governments. And so I found myself in a lot of rooms with a lot of lawyers who are all very smart, right? These they've got great heads on their shoulders, but none of them were engineers. And we were all talking about deeply technical subjects, despite being 1 to 2 to 3 to 4 degrees removed from the actual hardware. I remember specifically there was one very specific subject. We were debating the use of lasers and the regulations in around lasers in space. And nobody in that room could tell me what lasers were used for in space. We're all debating the regulating technology without actually understanding what the technology was even used for. I have to leave. This is nuts. And so, to answer your question, yeah, I think the entire idea of specialization specialization and siloing, or without paying attention to sort of cross-functional capability, that's something that has to be done away with. Sustainable way to make it forward, or to go forward in this modern era. You need to have situational awareness about where you fit into the wider picture.
Are you following any particular policies right now that you would believe makes a seismic shift in space insurance?
Right. So the big thing in and around space insurance right now, I think, is market capacity. The last few years, I can't sugarcoat it. It's been rough on the insurance industry. Right. 2023 was a year of historic losses, and the prior few years before that haven't been great either. And so a lot of markets, or rather a lot of carriers, were forced out of the market. The problem with that is, of course, when you have carriers exiting the market, you just lose what we call capacity, which is the insurance industry's ability to underwrite a certain amount of risk at any one time. So, dwindling capacity is a big sort of systemic issue. And so policy changes that can encourage more capacity to enter the market are obviously of huge interest to us. And so one really good example is the EU Space Act, which has a lot of onerous regulatory obligations. And I violently disagree with a lot of them just because of how much of a burden they place on industry. It's inherently anti-innovation. But one of the interesting things that it does account for is it harmonizes the requirements for indemnifying governments against in-orbit liability. So the wider regulatory and legal picture around that is essentially because of a series of treaties that were signed in the 60s and 70s. The 4 core treaties that underpin all of space law are the 1967 Outer Space Treaty and the 3 conventions that build upon it. And so based on the laws there, and because space law itself is a subfield of international law, the legal picture is as such. One, the only actors that are actually recognized are states. Right? So private corporations, individual human beings, these entities do not have standing at the international legal level. It is all about state to state relations, right? And so because of that, essentially the rules are such that liability for space assets or for damage caused by space objects attaches to the state rather than to individual companies. So a privately launched US spacecraft, if it hits the spacecraft of another country, it is up to that other country's government to claim against our government. Or vice versa, right? And so this actually extends out to foreign assets launched from U.S. territory as well. There is a mechanism to apportion fault, and so because of that, all countries are subject to these liability obligations if they've signed up to the treaty system. Countries deal with this obligation in inconsistent ways, right? There's inconsistent regulation, and so if you want to operate across different borders, it does make life a little bit more challenging because now you need to satisfy multiple regimes. The EU Space Act has an interesting function in that a lot of the European countries already require liability cover in order to indemnify the governments, the relevant launching states against losses. The EU Space Act actually does go some way towards harmonizing those requirements amongst all EU states. And it is an interesting sort of benchmark to look at because obviously as we start launching more and more things, one has to wonder whether or not, it might be a good idea for more countries to actually start requiring third-party liability insurance. And beyond that, what should that regulation actually look like, right? In an ideal universe, it doesn't bog down industry. There should be a ready and willing insurance market, and the cost or the additional opex of having to take out this insurance shouldn't be unduly burdensome. But it's one of those rapidly evolving pictures. But anyway, so the liability issue is what I'm personally paying attention to, and so the policy realm, and that is one of the things that has, I think, the greatest potential to affect the insurance industry, not just from a sort of operator level perspective, but also from an insurance carrier perspective. It creates a really interesting possibility for risk pooling, right? If you think about the early days of car insurance. The very first car insurance policy ever underwritten was actually underwritten by Lloyd's of London because at the time, well, I mean, the car was such a fantastically weird invention of the time, right? Like, what is this thing? It's got four wheels. It's got essentially, a mini chamber where you blow things up, and that somehow powers the four wheels, and this thing trundles along. And it was just such a fantastically weird mechanism that most insurance companies really didn't know what to do with it, and so Lloyd's underwrote the first policy. And the neat thing that we saw as auto insurance started becoming a more regulated thing. And so in the United States, and this, I'm like 90% certain that I've got this fun fact right, in 49 of the 50 United States, auto insurance is mandatory. The only state in which auto insurance is not mandatory is New Hampshire, because in New Hampshire, you can choose not to take out car insurance, but what you have to do is you have to post a bond with the New Hampshire state government, and you have to put, I think, $10,000 in escrow. Sorry, it might be $100,000 in escrow to basically protect against claims. And so it's functionally like insurance, but not exactly, right? So in New Hampshire, live free or die state. So it makes sense. They don't want to force people to get insurance. But the neat thing that we saw when auto insurance was regulated was what we call risk pooling. And so because the risk was spread out amongst a much larger population, the statistical likelihood of loss fell massively, which actually made it a much more profitable enterprise for insurance companies to participate in. And what happened then was that insurance companies came into the market, they offered more supply, and that dropped the price of auto insurance, despite the fact that there was a very, very small increase to begin with. And we actually see a similar thing with other types of insurance, even within space insurance, right? So I just had this story retold me this morning, but back in I want to say the 90s or the early 2000s, Iridium actually bought third-party liability insurance, and they weren't required to; it wasn't necessary. But when they did it, in the very, very short term, obviously Iridium has had a lot of satellites. In the very short term, prices increased because obviously there was higher demand, stable supply, right? Economics, supply and demand curve. So in the very, very short term, prices increased because there was less supply available for the rest of the market. But what that did was it triggered more carriers to enter the market. And so after 2 years, prices actually dipped below where they were before Iridium entered the market. And so that's a really, really good example of risk pooling. And what happens when you have more carrier or more participants in the market, you end up with more supply, and it it's a virtuous cycle because it means insurance is cheaper for everybody, which is, I think, another really interesting byproduct of what could happen if third-party liability insurance was more regulated, right? If more people bought it because it was a requirement of their governments, of whatever launch licensing regimes or orbital operations licensing regimes, what we'd end up with is much cheaper insurance across the board for everybody in the market. And so that has a tremendous, obviously, impact on the insurance industry, and it's a lot better for everybody because it also disaggregates the risk from the insurance carrier side. So, customers win, the government wins, insurance companies win, and it's a very, very virtuous cycle.
Just switching back to what you said earlier about 2023, I believe the statistic that Slingshot Aerospace estimated was $1 billion in payout claims, which included over 400 million net losses for insurance providers in the entire year. So definitely not the best year. On that note, engineers want to break fast, but insurance is punitive to failure. So how do you bridge that chasm?
I wouldn't say that insurance is punitive to failure, actually. 2023, for further context, so Slingshot statistics are correct, but it's slightly incomplete. There were $1 billion in payouts. That's not actually the full volume of all claims. Full volume of all claims is closer to about 1.8 billion. So for context, $400 million in net loss. The insurance industry makes about $550 to $600 million in premiums every single. Revenue holds relatively stable, and we can get into why that is. It's mainly because they can only really insure geostationary birds as of right now, because unit economics only really makes sense for the biggest satellites. And so with that, the number of geobirds that we build every single year holds relatively stable. It's stagnating somewhat, but you can reliably estimate how much the insurance industry is going to make if they aren't underwriting small satellites. And so $1.8 billion in claims, that's a lot of money. The lion's share of those losses actually came from a handful of satellites at most. ViaSat 3 was about $421 million claim. Sirius XM's XM5 satellite was, I think, $225 million. Astranis' Arcturus was $40 million. The mPOWER O3b constellation was, I want to say, $160 million. And so, within a handful of satellites, you've got the lion's share of these losses. Oh, there was also Inmarsat F2, which I think was also like $200 to $300 million. So it's a lot of money, and it's very, very densely concentrated, right? Now, the irony is that, none of these providers, other than Astranis, are, startups per se, right? A lot of these are older players. ViaSat's been around for a very, very long time. Inmarsat has been around for a very, very long time. Now, those two companies are the same company, so that's also very funny. But the satellites that are currently getting insured aren't really called new satellites, right? These don't belong to new startups. Insurance doesn't punish innovation. Insurance is a safety net for more innovation to take place. Because ultimately, an insurance policy is a means of risk mitigation at the company level. So when you're building a satellite, you have 6 or 7 reviews, right? From your PDR to CDR to all the way to your flight readiness review at the very end, right? And each review, the point of each review is to conduct risk mitigation, right? You assess what major risks are, what measures have you put in place. If you have a bunch of single point failures, have you added in redundancies? If you have novel components, have you adequately tested them? All of that is meant to reduce risk, because ultimately, you want the satellite to work, you want the mission to succeed. Insurance is pretty much just the exact same thing, but from a slightly different perspective, right? Insurance policy is a guarantee that you have a 1x return on your asset, because things can go wrong. Things will go wrong, right? It's difficult to mitigate every single source of technical risk. So you can abstract it one level higher. Instead of implementing some new technical regimen, you can add in an insurance policy, and it guarantees that you as a startup have a chance to fly again. If things go awry, as they very well might, you don't have to bet the entire farm on this one thing where, there's a real chance of failure for reasons completely outside of your control, right? Let's say some sort of extreme space weather event takes place, knocks out your satellite. You haven't done anything wrong, and yet you are still going to have to shoulder the loss. And so insurance encourages innovation in that it gives you another chance to fly again. It introduces standards that aren't defined by the government or some other arbitrary body. The standards are there specifically to support the exact thing that you want, which is mission success, right? The neat thing about the insurance world in space is that there is no such thing as insurance fraud, right? A satellite is significantly more valuable if it works than if it doesn't. And so there's an unusually harmonious alignment of incentives in space insurance in that everybody wants the same thing. Everybody wants the satellite to work because if it does, everybody makes money. And so, in that sense, insurance companies are directly incentivized to support mission success rather than, what you have with consumer or healthcare, in which case, you might have sort of a misalignment in incentives, and that leads to bad behavior. Every single insurance company we work with, every single underwriter we work with, is incredibly passionate about this industry. They all want more companies to succeed. They want more birds flying. They want more. They want the market to grow, and part of it is passion. Part of it is rational economic incentive, but it doesn't really matter because all that really matters is that everybody wants the same thing. And so insurance policy is designed to encourage further innovation. And I can go further into sort of the economic incentives of what insurance enables. But I think the long and short of it is that insurance helps companies. It doesn't hurt them.
Sure. Comparing legacy companies and new startups, for decades, GeoBirds, geosatcoms have dominated space insurance, but 2025 looks a little different. There's more diversification in funding as well as rideshare launches. How has your addressable base shifted, and can you share any trends that you're seeing?
Yeah, absolutely. So the big trend that we all know and that we all notice is that there is a very distinct shift away from the geobirds, right? We're looking less at these big monolithic, single satellites, and we're looking more at, fractionated or decentralized architectures, right? Constellation architectures are fundamentally that you spread the risk amongst multiple systems rather than dumping everything into one giant exquisite system. And so that trend is obviously persisting. Now, you're completely right. The insurance industry historically has only really looked at geobirds. Now, the big reason why is because the economics of underwriting a geobird is historically what's worked best. It takes a lot of time to underwrite a satellite. It takes a lot of effort, and it costs a lot of money from the insurance company's perspective to assess the risk of a geobird fully. And so, with geobirds, they're worth hundreds of millions of dollars, right? The premiums that you can charge are sufficient to actually cover that cost basis. With smaller satellites, that's significantly harder. And that's actually a big part of what Charter does. We streamline the underwriting process and we make it easier for companies to obtain insurance by making the underwriting process a lot simpler. And so we drive down the cost basis for underwriting. With that, we can effectively do two things. One, we can make insurance significantly more efficient, right, which drives down costs. And what that does is it opens up the possibility of insurance for many, many more operators, right? Guys who typically would not or historically would not have qualified for insurance because their assets were too small. We've brought down the threshold from 200 million to 2 million. And so that's a 2 order of magnitude drop in terms of what is considered insurable, thanks to us. And the other thing that we've done is we've been able to achieve all this with the same level of fidelity and verifiability, right? The insurers don't have to cut corners. They can have just as much confidence in the underwriting, and in their risk assessment as they used to when they were sinking months to years into an underwriting exercise. We give them that same level of confidence, which what that does is to what I mentioned earlier, it attracts more supply into the market, right? You all of a sudden have changed the fundamental unit economics of underwriting space. You have now made it significantly more profitable, which means that there will be more entrants, which will further drive costs down because as supply increases and demand holds stable, even if demand grows, if the growth of supply outpaces demand, it's a drop. And so that opens up the possibility of getting insurance for more companies. And it's a very virtuous cycle. So ultimately, that's the big trend that we're seeing, right? Through us, and not to toot my own horn too hard here, but what we've essentially done is we've made insurance significantly more affordable and significantly more accessible, and so we're starting to see more companies look at insurance, right? We're starting to see more folks be interested in insurance as a means of risk mitigation. And then what that does is it opens up the possibility of new forms of capital participation, right? So new forms of financing. A couple of days ago, I don't know when this is coming out, but a couple of days ago, as of recording, Space Leasing International signed a deal with Ascendor to buy 2 satellites on lease. That is the sort of thing that's possible, or that sort of deal is possible when you have proliferation of insurance in the industry, right? Because it creates the opportunity for more sources of capital, more types of capital to participate without having to take on undue risk. When you think about what private credit funds or what debt providers are interested in, the incentives are very, very different from a traditional venture capital firm, right? A venture capital firm has a much higher tolerance for risk. They have much longer. They're comfortable with their capital being locked up for much longer periods, and it really is more because they get a lot more bang for their buck, right? Equity is extremely expensive from a cost of capital standpoint to founders and to companies, right? Debt is significantly cheaper if structured correctly, but debt is currently unwilling to participate in the space market more broadly because, one, the risk is difficult to quantify, and two, everything is uninsured, right? Like, it's a really, really simple proposition. I can't get a loan for a car or a house unless I have an insurance policy in place. Why on earth would it be different for a satellite? And so when you change that, when you actually have satellites getting insurance policies, all of a sudden they can go apply for a loan. Asset-backed financing becomes a viable option. Lease financing becomes possible. There's a whole universe of capital out there that is waiting and happy to participate in space, because space, from a risk standpoint, actually represents one of the few areas on Earth where it's truly uncorrelated risk. And so it would be incredibly lucrative to tap into it if certain conditions are met, like there is a backstop to losses, and that's exactly what insurance does. So that's another one of the new sort of emerging trends that we're seeing. New sources of capital starting to feel comfortable with space and starting to probe around what opportunities may lie therein.
Charter is built with NASA JPL, Rocket Lab, and military engineers, which means you all bring access to intrinsic risk data that others don't have. How does this data symmetry help you drive down costs, but also unlock new sources of capital?
So we don't necessarily bring access to existing data because all that is proprietary, but it does bring access to expertise, know-how, and experience, right? We're made up of a team of folks who've built impressive things, who've built satellites, who have been in sort of high risk environments in the past, and so with that, comes certain modes of thinking and certain frameworks of how to assess, analyze, and underwrite risk. We don't underwrite ourselves, to be clear. That requires a much bigger balance sheet than most startups have access to. So we actually work with a number of traditional insurers. Some of them are at Lloyd's, and some of them are outside of Lloyd's. But these are carriers who have been working in space for the past 60 years. Right, the first satellite that was ever insured was Intelsat 1 in 1965, and a lot of that heritage comes along with it. And so, in terms of how we're built, how our products are built, and how that contributes to sort of better underwriting. Essentially, we understand that satellites can be understood in a systematic way, right? So we have a fairly comprehensive and extensible data model that underpins all of our tools and a lot of our software. And so with that, we are able to structure and contextualize and make sense of what is typically unstructured data. So when I say data, I mean, all the things in and around how a satellite was built, right? Testing data, anomalies, and various artifacts that are generated throughout the course of a 12 to 24 month long engineering campaign, requirements, everything that goes into a satellite, really, every variable that describes any one thing on that machine. We're able to make sense of all of it, and then we're able to pass on that understanding and provide that structure to the underwriters who are typically looking at a mass of unstructured data, right? If they get sort of a technical briefing, it's hundreds of pages long, it takes them months to parse all that information. We can dashboard it, and we can make it significantly simpler. Just even the mere act of having all this information be interactable and queryable makes the process of actually understanding the risk that much easier. All these data points are proxies for risk. It's our job to make it easier and to make that journey from proxy to actual metric a lot shorter.
You became a top 5 finalist of TechCrunch Disrupt Battlefields. Congratulations on that. And you also announced the acquisition of Plover Parametrics in the same TechCrunch Battlefield. How do you, as a business, qualify your acquisition targets?
The founder of Plova actually walked right up to me at an event a few months ago, and so it really was just a very, very convenient and serendipitous arrangement. Essentially, what the acquisition gave us was the ability. Well, it gave us status as to be nationally licensed to broker insurance. Now, insurance is a heavily regulated activity. Every single state has its own set of rules. There's a Department of Insurance in every single state, and they all have their own regulations that abide by. They're both federal and state level regulations, and so actually becoming nationally licensed is a huge regulatory lift. It's not impossible. It just takes time and it takes money. And so what the acquisition really gave us was the ability to be nationally licensed functionally overnight. One day we were just shorter, and the next day we were the only specialized insurance brokerage agency tailored for the space industry in the country. And so that is a huge asymmetric advantage that we have, because we get to be the only specialized body dealing with this very, very, very niche and technically sophisticated market. We can bring the expertise, and now we have the regulatory clearance to bring that expertise to bear to solve the problems that we want to solve. And so in terms of qualifying the acquisition target, it really was as simple as, well, these guys are fully nationally licensed. We would like to make a deal. We came to agreement on the deal terms very, very quickly, and I'm pleased to actually say that Plova's successor, which is a fantastic company called Use Postal, is currently supporting us for our compliance requirements. So I was literally talking to the founder of Plova literally this morning to talk through various compliance things that I could use his help with. And so I think that's the other thing in terms of what helped us feel comfortable with moving forward with the acquisition. It's just, who are you choosing to work with? How closely can you align your incentives with theirs? If it becomes a mutually beneficial deal, that's the best sort of deal. And so, that's another thing. They were easy to get along with. They were easy to work with. It's a fairly quick and speedy acquisition process. And so, I guess the ease of progress is another big qualifier for us. There's a Latin concept that translates roughly to meeting of the minds, right? It's fundamental principle in contract law. Taking that example, if it's easy to arrive at a meeting of the minds, then that, I think, should make for a fairly, at least, good deal.
How does life look before and after? What does this unlock in terms of the economics, in terms of the access for you now?
Absolutely. So prior to this, we were just a technology company, right? We built very valuable technology, and we ultimately created a lot of value, especially for the insurance industry. But we weren't fully maximizing, or I should say, we weren't fully maximizing our ability to share in the value that we created, right? And so, again, because insurance is a regulated activity, we weren't able to act as a broker for many of our customers. We had to involve external brokers who just weren't as familiar with the market. They weren't as familiar with the risks that we were talking about. They just didn't understand these companies, right? They were not specialists. They deal with all manner of different types of things, and I can tell you, without sharing specific details, but some of the insurance policies that we've seen space companies get have been just absurd. Exclusions that make zero sense. They were overpaying for certain things. We had a customer who was paying for hangar keepers insurance. They're not building planes. They don't have a hangar. But, their insurance broker, which had specialized in ultra high net worths and the entertainment industry, had once put together a policy for like a small aircraft leasing company, I think. So, obviously they needed liability cover for their hangar. And so that's what they baked in. They grandfathered in a clause that made zero sense. And ultimately our customer was paying for a risk that literally did not apply to them. And so, we were having to involve in brokers because it's a regulated activity, and they just weren't adding a whole lot of value to the transaction. That was a deep source of inefficiency, right? And so what this does for us is it allows us to deliver much better services to our customers. It allows us to add a lot more value to them, and it gives them the confidence to know that their insurance broker actually understands their business, right? That's exactly what you want out of any sort of advisor or company that's providing you some professional services. You want the confidence that they actually understand your business. It's the same thing with having a lawyer or or what have you, or an architect or whatever, right? If you have an accountant, you want them to understand how your business makes money so that they can accurately book all transactions. If you have an insurance broker, why wouldn't you want them to really understand your business inside and out so that they can give you the best possible advice? That's exactly what we do for the space industry. We are not traditionally insurance people. We are space people. We just learned insurance. And so that, I think, means that we have a massive advantage over anybody else because we come from the industry. We understand our customer better than any other insurance company on earth.
So, parametric insurance is having a moment across climate. How do payouts adjust when the predetermined metrics, for example, altitude deviation or certain satellite orbital anomalies, start to shift? Is that baked in right now, or is that somewhere in the works?
So I would say that the space insurance industry isn't quite at the level of maturity where parametric insurance actually makes sense. A lot of policies are highly tailored, both to the peculiarities of technology as well as the peculiarities of the mission, both of which are closely tied, right? Because most satellites are functionally custom. They're built to spec to satisfy a series of mission requirements. The design of the spacecraft primarily derives from these requirements, and that's how systems engineering as a field works. And so the way that insurance is structured and the way that loss formulas are currently structured in the insurance industry today, it's primarily in around what is the satellite supposed to do, right? Like what is mission success? Is it a binary pass fail? Is it a spectrum of performance? If you are performing at, say, 80%, is that a failure? If you're performing at 60%, is that a failure? Is there a bright line beyond which the thing is considered unserviceable, or you're in violation of an SLA or a contract or what have you, right? And there's a number of different ways to frame this. It's really, really particular based on the specific mission itself. And so in terms of how losses are calculated, there isn't a hard and fast rule. It really does take time and understanding the technology. So that's, again, part of the value that we provide, right? We help to capture everything in around the spacecraft as it's designed, manufactured, assembled, integrated, and tested. And so inherent to that is the series of requirements that the spacecraft is meant to satisfy. And so we actually help inform the loss formula, and we help inform how the loss formula is structured in a much more accurate fashion, because we take that information directly from, well, one, the internal engineering environment, but also we can provide a historical record of exactly how that mission has shifted and changed over the course of the program, right? Whereas you might have started out looking at one thing, what you end up with at the point where you apply for a policy may be slightly different, and so we can actually view that, we can make evident that evolution, and that obviously has an impact on exactly what counts as a pass or a fail in terms of mission performance.
So, SpaceX is famously self insured, and they do reduce risk with a twin design by replicating the same design across all of their systems. Beyond SpaceX, you mentioned that only a fraction of satellites are actually insured. And so now that we're talking about what does mission success actually mean, going forward, we're going to have launch and landing that becomes ubiquitous. We're going to have in-orbit servicing, refueling, robotics repairs, which blurs the line of what the asset lifespan is. So once this asset lifespan is extended, possibly indefinitely, how do you account for the logistics management, for the coverage accounting, when the assets are not quite dying?
So there's actually a very simple answer to this. Most policies are renewed year over year. And so you only really need to project out 365 days. So, unless unless your satellites plan to be obsolete within that 1 year, it actually doesn't matter. You can adjust course as you go along. And the neat thing about what I think insurance enables is, as you point out correctly, there is this entire burgeoning, I call it the space for space market, right? I would put in-orbit servicing and so ISAN capabilities in that space for space market. But you can extend it out even further. In situ resource utilization to refine materials on, say, the moon, like the extraction of hydrogen and oxygen to produce fuel for deep space exploration. I would class that as space for space, right? Because that doesn't necessarily tie back to value generator on Earth. But as we start looking at space for space and further proliferate space for Earth, stores of value. The interesting thing that insurance actually does is it creates the possibility of a standardization of risk metrics, right? It tells you exactly, well, if an insurance policy is, I'll say 10%, then you can benchmark that against other things, and you know exactly how risky this asset is. And the neat thing that that could create is a secondhand resale market. In history, there have been a handful of transactions where satellites that have reached the end of their original orbital lifespans but were still useful assets were resold to your secondary owners, and all those transactions were incredibly bespoke. A big part of what made those transactions so bespoke and so difficult to actually execute is when we're not speaking the same language in terms of risk, right? Everybody has a different metric. Insurance is a forcing function to standardize that calculus so that everybody understands what 10% means or what 12% means, right? What that corresponds to in terms of price, how it acts as a benchmarking function for how much these transactions should cost. And as we start introducing these standards, and as we start having more transactions take place, the entire process gets streamlined, which then accelerates them even further. And so then you have the development of an actual sort of in-orbit commodities market. So that's one of the interesting things about the proliferation of sort of space-based activity, right? Insurance is an enabling function and a force multiplier across all of these different areas. Insurance isn't just about, we have a constellation, we send up a bunch of satellites, and then some of the satellites fail and we get a payout, right? That's what the user sees. But when you get down to, when you abstract out 1 to 2 layers and you start looking at it as an entire economy or as an entire ecosystem, insurance solves a bunch of different functions all along the way and provides points of leverage all along the way that enable further activity, or they streamline the processes that enable further activity to take place.
What are 3 chess moves that materially changed your trajectory?
So I think the first one was I chose to look at it from a human standpoint, right? I don't remember where this is from, but there's a saying that all buying decisions are emotional decisions, right? And so ultimately, organizations are not monoliths. They're made up of people who have lives, who have emotions, who have problems. They can have bad days, they can have good days, what have you, right? And so, choosing to try and understand organizational behavior from a human behavior standpoint was, I think, one of the biggest sort of intellectual unlocks for us and for Charter, because I realized that at the root of a lot of the issues that we faced, both in terms of coordination, but also in terms of interacting with advisors, interacting with customers, something that I realized was that there was generalized sort of there's a proliferation of short-term thinking, which is ironic considering that most space projects are measured in years rather than weeks, right? But there was a proliferation of short-term thinking, and I realized that a lot of that was driven by the fact that everybody was functionally cash-starved. No matter what your specific application is, no matter where you are in the world, what your technology does, what your background was, there's a massive cash crunch throughout the industry. And so this is what sort of led me on to, okay, well, then there's a missing middle in terms of non-diluted financing. There's not enough capital in the market. Why isn't there enough capital? Yada, yada, yada. And so understanding that all of these decisions were driven by the fact that everybody was always perpetually terrified of running out of money, and everybody was very, very anxious to make sure that the money lasted, drove a lot of initial insight. So I think that's one of the first chess moves, right? Like, I think choosing to look at it less so as a technical problem and more so as a human problem. So that's the first thing. The second thing is building on from that, pursuing that all the way down. Right. I think it's because if you say that there is a cash crunch in the industry, I think most people would immediately go, okay, well, let's go get more money into the market. Right. And so that would have led me down a false lead. That would have probably led me down to go try and raise a fund, which would have been an objectively terrible idea. On the point of intellectual honesty, really pursuing that line of logic all the way down and trying to get to the root cause. And, identifying that this is a systems level problem, the system being the wider space industry, but all system level problems originate somewhere, right? And so actually tracking down the root cause as being, well, bad data management, and then that trickles up and the problem compounds. That was probably the second a big thing, being willing to chase down that lead despite not really knowing where it went. And, that was independently confirmed by my own experience, right? Because I experienced that micro level problem. It just never clicked in my brain to connect that macro level sort of experience to micro level problem that I was always experiencing, that I had, that I'd lived. And so being able to connect those 2 points felt like some sort of earned insight that not a whole lot of people had. And now I spend all my days talking about this thing because I want more people to realize that, this is something that's happening. It's a phenomenon that is very, very observable. I guess the third move would be understanding sequencing of operations, right? So that's the third thing. You can't just jump to the end. You have to do all the hard work, grind it out in the meantime. And so actually having the patience and having, I guess, the conviction to follow that order of operations in the way that it has to be built out, right? We did not start off with insurance. In fact, I like to say this all the time that, the insurance thing was something that I predicted a while ago. And so I don't even know if this is still available anywhere. I may have lost access to this video, but I think it might still be on YouTube. Basically, we had a sort of concept product demo video all the way back in December 2021. And that's what I used to launch, to gather our first few LOIs and our first bit of initial commercial traction, but also, to actually show investors what the vision was. And even in that initial demo, we had a little widget that said, get your insurance here, or something like that, right? We explicitly called out insurance all the way back in December 2021, but I never actually talked about it. I think the first time I talked about it was maybe September or October 2022. And that was in a private conversation. We only really started talking about it in a much more sort of big fashion this year. And so we called the shot 3 years in advance, but we had to do all the grunt work before that to actually make that insurance solution viable. And it was all about having the patience and having the conviction to see things through, and to assemble the foundation blocks step by step.
Just to be clear, step 1, humanize the problem. 2, run a root cause analysis. And 3, discipline, close the loop, be patient about it. I can really see the systems engineering. I am curious. We share a few similarities. We've both spent some time in London and in Los Angeles. What's a work ethic that you've carried forward from either city?
By the way, that was a fantastic synthesis of everything that I talked about. I rambled on for like 10 minutes. You nailed it like that. I would say that, I love the pub scene is what London is known for best. I didn't really participate all that much in it. I think that one of the biggest things with London was understanding geography, and really learning to center yourself in the center of the action, which is ironic because London isn't exactly, well, that's the sort of lesson that you might expect to get from like San Francisco or something, right? Like locating yourself in the heart of Silicon Valley, and the concept of there's a concept called propinquity, which is to say that the idea that the more your path intersects with any other person's path, right? If you share a bus route, if you live in the same building, the more sort of common surface area you have with them, the more likely you are to interact with them, right? And so that's what propinquity is in a nutshell. So, London taught me that being in the right geography matters tremendously, right? The UK is not a super large country, and yet London is a disproportionately large center of activity for many types of really interesting things, whereas the rest of the country is, sleepy and calm and relaxed, and there's a certain appeal in that, but there's a time and place for it. And so conversely, London is no longer the center of the world. It was 100 years ago. It no longer is. Even as a financial hub, it is eclipsed by the sheer volume of transactions coming out of New York. And so whereas London and New York used to be twin cities in that respect, London has been outpaced, and certainly from a technology perspective as well. It's just as important to learn about the geography, the importance of geography, both from being in London because it's a big center of activity in the UK, but also from the perspective that it is not a center of activity globally anymore for the things that I cared about, right? And so being sort of left out or not being able to be as close to the action was also very, very good. It also taught me a lot of really valuable lessons. Definitely the value of geography and being where the action is a big part of it. I think being in LA, so I live in LA now. LA is fantastic. Can't beat the Southern California weather. I think that the food scene this is going to ruffle a lot of feathers. I think that there's much better Asian food in LA than there is in SF. That's my opinion. Write me about it. I guess I hate using the phrase melting pot, so but I'm going to use it anyway because there's so many different industries represented in LA. It is a real center of activity across many different avenues. It's obviously a major aerospace and defense hub, and most people don't know LA for that, right? Most people know LA for Hollywood, for entertainment, for the beach, and for having great Cali Mex cuisine. And it's interesting because it from a work ethic standpoint, it reminds me that it's very possible to become very, 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 very successful and be very well known within your field for one thing, and for everybody outside of that field to have absolutely zero point of reference. And so it's a great point to remain humble. Because I cannot tell you how many times people have asked me, why am I located in LA? And I go, well, because historically it's been a huge like aerospace and defense manufacturing hub, and they go, really? Huh? Where? I thought it's all the beach. And so it's a good reminder to stay humble, but also it's a good reminder that the world is much bigger than just what we deal with, right? I think space has a tendency to be very insular. I've heard this said on like every panel related to communications in the industry dating back years at this point. But space is a communications problem. We're just not very good at communicating what we do and why that's relevant to the wider universe. LA is, I think, a really good place to be reminded of that we are not the center of the universe and that the world is much bigger than we know. And this actually ties into the whole systems level thinking thing that, the space industry exists within the context of the wider world, right? And it exists within the context of the wider economy. Space is worth, what, $600 billion now, I think, is the latest Euroconsult estimate. But space is an enabler to trillions of dollars worth of other industries, right? From agriculture to maritime shipping to defense to whatever, right? Weather prediction. Like, space is an enabling layer for all these other industries. Space does not exist for its own sake, right? So when I talk about space for space versus space for Earth applications, space for Earth applications still dominates the vast majority of revenue that goes into the space industry. But I find that in many conversations, nobody ever really thinks about exactly what the follow-on knock-on effects are, right? Like, what do we do next? Or where does this data end up? And so, I think LA as a city is a really good reminder that the world is much bigger than us. And we have to be conscious that when we are building things, when we are delivering value, there is an end recipient, and that end recipient probably doesn't sit in the space industry. And so bridging the gap of understanding and telling the rest of the universe why they should care about our work is incredibly important. I would say just as important as the work itself.
You have seen the classified lens of military logistics and the commercial realities of mission insurance. From your dual vantage point, where does the US have insurmountable advantage in space systems, and where can we focus a little more?
So this is going to go back to a little bit of military theory. So there's a wider sort of field of study in around broadly speaking, Western style militaries versus, call it, Eastern style, right? Eastern being sort of characterized by the classic Soviet or Chinese archetype of a central command structure that is very much sort of radiating outwards, versus the more decentralized model of Western style military, where you empower your NCOs, your non-commissioned officers, your platoon, company, and field level positions to independently execute commander's intent. And so this also speaks to the power of innovation in the Western world, right? Like there's a fantastic book called How Innovation Works that talks about sort of decentralized nature of innovation, that when you create a capital and intellectual environment that empowers individuals and that enables sort of individual endeavor and exploration, you end up with parallel advancements that independently arrived at in parallel, and it's a net accretive effect. So, for example, one of the great canonical examples is the discovery of calculus by both Newton and Leibniz, hundreds of miles away from each other, right? One was in Germany and the other guy was in Cambridge, and so they both arrived at it independently. I mean, obviously, you can read into the history, and some people think that. I think it's fairly well established that both of them arrived at calculus independent of each other, despite each other's claims to the contrary, right? And that is one of the most powerful things that the United States has going for it, both from the military perspective as well as the innovation perspective, right? Because the Western style militaries are very much in the same sort of vein. They empower individual commanders that are much closer to the action. to exercise autonomy, to exercise agency, to go out and achieve objectives. This the entire concept of commander's intent and end state embodies this really, really well, because it empowers individuals or small team leaders and small units to go out and execute against commander's intent to achieve an end state. Whereas in Eastern style militaries, it's very dictatorial, it's very top down, it's very rigid, right? And because of that, it doesn't really allow for on the fly thinking, and it doesn't really allow for independent agency to be exercised, which takes away one of the biggest, I would say, assets that any large economy or military has, which is that it should be made up of intelligent human beings who should be able to make decisions. If you take away that autonomy and the ability to make decisions, you essentially reduce the success of the entire organization to a handful of people, which is exactly how you get blindsided. It's exactly how mistakes get made. And so one of the biggest insurmountable advantages that I think the United States still has and will continue to have, because the culture that we have reinforces this and encourages this, is the fact that we have a decentralized, almost creative process to problem solving. It's a cultural advantage. It's something that's difficult to replicate in other places that don't share the same values, that don't share the same perspective. And it requires I would say it requires a mindset that is difficult to replicate inorganically, right? It comes down to what a society believes and values in. And so that same sort of empowering of the individual and the individualization and the elevation of the individual to a position where they can do great things and where they can have great impact and they can rally people behind them to compound that impact further is one of the biggest advantages we have.
At our LA Tech Week panel, you quoted that extrinsic risk isn't priced in LEO because we lack the accurate tracking data or the comprehensive tracking data. What breaks that stalemate? Is it better situational awareness technology, or is it policy mandates?
Which one drops first is a really interesting question, because obviously the development and advancement of technology is a process, right? It's not a binary, today we have it, yesterday we don't have it sort of thing. I mean, accepting for breakthroughs. Whereas policy changes are very binary, right? It's today that doesn't apply, tomorrow it will apply. So I would say that technological advancement comes first, right? Just because that's something that's ongoing. We see it today, we'll see it tomorrow, we'll see it next week, and next week will be even better than we are today, right? And so, there are active economic incentives to improve SSA and SDA capabilities, right? Obviously, a big part of that is driven by what the War Department requires, but also from a civil space and commercial space perspective. Better space traffic management is in the interests of every actor in space. Space is a commons. And so because of that, good behavior, whilst not explicitly rewarded, is accretive. It helps everybody. And so I think better SSA capabilities will be the first thing to shift that balance. And I would say that a policy change has to follow in that trend, right? And don't get me wrong, I think that we've got great tracking capabilities now, and they're getting better. It's just that historically, we haven't really been sufficiently advanced to enable the level of accuracy and fidelity that you would need in order to better price the risk from an extrinsic standpoint. Today we have a bunch of SSA companies I can think of right off the top of my head, right? Leo Labs, Slingshot, Kahan. I bring up those three specifically because they came out in a conversation this morning. I'm not deliberately ignoring everybody else, but these companies are here today because there is a real sort of use case for them, and that use case will continue to grow as we require SSA data more and more for a variety of different applications. I think a policy change is ripe now because the environment is changing and evolving such that it makes it possible for a policy change to take place without immediately stonewalling progress in the rest of the industry. But yeah, I would say that, I wouldn't say that it would take one or the other to break the stalemate. I would say that it takes both, and that we are currently breaking that stalemate. It's an evolving situation, and we are on the way already.
And speaking of technology advancements, the floor is yours. What should we be watching from Charter over the next 3 months?
Well, so, of course, we've just completed this acquisition, and lo and behold, like I mentioned, insurance brokerage is a heavily regulated entity. We're still getting through a lot of the paperwork, but in the next 3 months, we will be fully stood up and fully operationalized, and that we have all the infrastructure in place. We have all the folks in place. We're actively hiring right now, so I would love to hear from any of your listeners if they have commercial producer and surplus lines licenses in the state of California or nationally would be fantastic. And so we're standing up our infrastructure, we're standing up our so operations, and in the next 3 months we will be going out to market much more aggressively to better provide services for everybody. So like I mentioned during my TechCrunch Disrupt pitch that we're actively working with our first 4 customers to get them more accurate coverage, not just for their satellites but for their regular business needs as well, and that is what we will be doing much more aggressively in the next 3 months. Odds are good that if you're a space company, you're probably overpaying for something, or you're not accurately covered. Let us help you. Exactly. And so let us help you. Let us do a policy review is free. We will go in, figure out what's wrong. If there's nothing wrong, fantastic. But there probably is something wrong, let's be honest. And so we are here to help. And so besides that, well, we have a very exciting slate of new features that are coming out on our systems engineering tools very, very shortly. And so, it's a continuous process. It's a big canvas. It's an oil painting. It's never done. And it's just going to continually get better.
Yuk Chi, how can satellite operators or other business operators reach out to you or reach out to Charter?
So visit our site at charter.space. That's charter.space, and you'll be able to get in touch with us directly there. I see every single contact form request, and I respond to a good number of them personally. And so if you want to get in touch with me, literally reach out there. I'm on LinkedIn. We're on LinkedIn. We're on Twitter. I guess it's X. So I am terminally online.
Thank you for joining us today. This has been Space Terminal. I'm Zuni from Imagining Forward. New episodes are out every week, and you can find Yuk Chi and Charter Space in the show notes. You can also look up Charter on our intelligence tool at imaginingforward.space. Thank you.